Alright, guys. Already. Happy Saturday. Happy Saturday. I will allocate an hour or so, maybe an hour and a half if I can. Depends on how slow or fast I could deliver my speech. Huh? Deliver my shows. Just chill it. It's weekend. It's Saturday. Typically, that's not the time to be doing things related to GameStop at all because really nobody cares about GameStop apparently. It's okay. Um, to me, that's actually an opportunity now. Maybe I'm just the only one who think that. In the grand scheme of things. All right, so it's 9:30 right here where I'm at in the morning. So hopefully everyone have some coffee, enjoying your morning. Hey guys, what's up? Thank you so much for joining. And let's see. So not quite sure where the topic will lead to. Of course, it's going to center around GameStop. And I have an article that I would like to kind of, react to. Um, there were a couple points there that I feel like, it's kind of suspicious that they want GameStop to go into that direction and all that stuff. But before that, let's talk about the price real quick. Um, Wait a minute. Why is it not? Oh, and um, I will be there in 1 minute. So I'm looking at trading view over here. Bitcoin's going crazy. We saw what happened a couple of days ago. To be expected. And of course, XRP, XLM also exploded, which give me a good amount of bullishness. I think it's gonna continue for sure. But hold on, you guys, give me 1 second. Hey, Manuel, what's up? Good morning. Hopefully, you guys are doing well in this wonderful Saturday morning. What am I? Oh, okay, this is what I'm waiting. Sorry, I should have set this up before. Okay, so a lot of things happening. I really truly feel that Bitcoin is setting up for a leg higher. So let's talk about GME first, and then we'll go to Bitcoin. So this is the articles that I wanted to kind of talk about. Yeah, you will see. Okay, so again, Jimmy not doing much, right? Holding pattern or whatever. They want to kind of keep the price at this level as long as they can for, in my opinion, they're trying to bore people to death, which is to be expected, right? You might not see anything until next year. That would scare so many people off, right? Because, technically, if they're able to hold it this long, theoretically, they could hold it until, next year. They could make an argument like, well, Jimmy's not worth anything because they're not doing anything with the cash. You heard about Tono Dinero shows. They trying to say that nobody give a shit about the cash on hand. Okay, that's remain to be seen. I think cash on hand is a very good safety net to even, to I guess build your company up on. I know, as far as the return of 4% and all that stuff, nobody cares about 4%. It's like they could just buy treasury bond, whatever arguments that they are saying. I did watch Moran's reaction. I agree with his assessment on that one, where not many company could raise this amount of money. So publicly anyway. The fact that we are able to do an ATM to the tune of $7 billion so far, including the, actually $8 billion, including the Bitcoin holding too. We did the ATM at the money offering. We did the convertible notes and buying Bitcoin on that one, using some of those cash to buy Bitcoin. I know not meaningful amount in which like people in relative terms to any other companies out there, and you could argue about the aggressiveness of that decision to put some money into Bitcoin. Whether you disagree or agree, that's up on you. That's on you. Perhaps this is what you're seeing the price right now, where people are disagreeing vehemently about the direction of the company. You could argue whatever side that you're on, but you see it in the price action. Of course, some of that is also heavily manipulated by the fact that the market maker has the ability to draw or to take the volume away at will, and so they will, do the best they can to what is the I'm trying to think of the right word here. They want to do the best they can to make you feel that the sentiment on this company is zero, meaning that nobody cares about Jamie. So that's where I'm at about the price action here. However, like I said, the price doesn't account for what the company is actually doing. The value of the company is still the same, right? Yes, they will raise money. They will, do the best that they can in order to gain the shareholder equity eventually. Okay. So that's the point of publicly traded company, or any companies at all, is to make money, to find feasible way to make money, to find, the best avenue for that. You could say that, this company is just too slow, look at Nvidia, look at, whatever other company, even even Strategy, they're able to strategize and use Bitcoin to their advantage. Why not GME? Keep in mind, every single company has an edge somewhere in the market. And so if Saylor, decision to buy Bitcoin was a forced one. He explained it so well in, interview. And of course, thank goodness it works out for him, right? Because what if, Bitcoin is still not in the center stage, right? What if Trump is not elected? Right? So it could go either way too, right? And so the fact that Trump was elected and he's like so bullish on the crypto asset itself in the second term, that's what give the crypto market the boost that it needed. So he's lucky in that sense that that it happens right now and not, a couple years, a couple more, presidency later. That's not to say that the next election is not going to affect the crypto holding either. So now, by that time, it might be too late already to regulate the crypto market. Of course, all of the Congress would have to come to terms. Of course, this week would be the crypto week, they call it, because then legislations and all that stuff, those important ones that we all need. But I really think that, this is all planned because of the current fiat currency and all that stuff, that, every single government out there, all they could do is just printing money. And so they need the solution. And the solution that they came up with is to have a stable coin so that they could buy treasury from it, which enabled them to, operating the country at a deficit for an extended period of time. And so right now, the problem that the U.S. has is that nobody buys the treasury bond. And so the stable coins company would be the one who would be buying those, or at least fill the gap, so to speak. That's going to create volatility in the market. Now, volatility is not necessarily bad. It's bad for the people that are already, own so much of debt. Right? That's why they don't want volatility. You see Jerome Powell speaking about price stability all the time. And so, a lot of stuff that they own it's related to debt, slavery, and all that stuff. So if you don't have debt in your life, right, excluding your house, you are actually free from the system. And not only that, you could take advantage of that. So that's what Bitcoin is designed to do. And so they spend the whole 4 years, the whole 4 years telling you that it is a scam. And the reason why they did that is because they don't want, the public to know the true value of it. The same way with Jimmy, they spend how many years now that they are trying to convince people, 15 years or so, try to convince people it is a scam. Not a scam, sorry, a terrible company to own in long term and all that stuff. They want you to trade, the company or the shares, which, look, if you think that you could make money on the fluctuation of price and you do it so well that you are going to become a billionaire for that, okay, all the more for you. Hey, Woken Chip, what's up? How is it over there in Denmark? Is it nighttime over there? Anyway, I have my coffee right now, so warm my head, warm my head. Let's see. Anyway, so price action wise, I mean, what else can I say? I mean, the trend and all that stuff is there. You could see this gap right here. Obviously, all of us is waiting for that gap to be filled. It's a massive amount of gap to be filled. But before that, perhaps it's going to do this thing and then go right back up, draw more people into, say, before the earnings. And that would be the last one. Who knows? Depends on what is happening. Oh, okay, 6 p.m. That's not too bad. That's not too bad. Welcome. But again, hey, just because I think that it's gonna go down here doesn't mean it's gonna go down here. Okay, just be aware of that. Perhaps this is the larger, thing here. 1, 2, right? So that would be this and this. Maybe. Who knows, right? I mean, you could do this thing here where people look at the fractal. Right, let's play that game. So shrink it a little bit. Okay, there we go, there we go. Look kind of similar. All right. Boom. So when do you see the next breakout? This is a fallacy in and of itself. Okay, don't be crazy. Similarity, but don't bet your house based on this pattern here. Okay. There we go. Perfect. Look at that amazingness. So just a time frame to look at. Let me move this one right here. Okay, there you go. So the next breakout would be, boom, November. November, so towards the end of the year. Yeah, I mean, will you still be here? If that's the case, doesn't matter what the earnings gonna be. They're gonna still kind of wet blanket it to death, kill the sentiment as much as they can. Um, I think they're gonna try to wait for the Grand Theft Auto to come out to see, reevaluating the company the best way. Guys, I feel like all of this is algorithm based pricing right here. And, for every single companies out there, they get to project ahead of time how much the company can earn in the next 50 years. And they price that model like that. So because they have time. And so, this algorithm is only um, to extract the the price discrepancy between retails and other institutions too that are late to the game. You know, the reaction, the reflexivity of people. Reaction to the news and all that stuff. So if you know the news, it's an aggregate of how many people are agreeing with that news, and if you got the news quicker than the rest of them, you would be the one to react to, whether the price up or down depends on where it is at. I'm sure that's why, the whole inside trading thing, because they are the first one to realize that, hey, if they're doing the convertible notes, this is going to happen. And so they react so quickly. I talked to somebody recently who's very aware of, what is happening here. I mean, he's not necessarily saying that it's correct in the way that they are pricing this, but it's correct in the sense that they already take into account. That's why the term pricing in, it used to make no sense to me. But I feel like right now, because everything is just mathematically modeling it to like so precise that they tend to know what the pricing is at any given moment in time. And if you're able to take the volatility out of it, the human behavior out of it, this is what you would see. So this is what you're seeing. The pricing is fair for them without any human emotion. Okay. So that's what happened. And you hear about Ken Griffin talking about it too, is that they have the algorithm tuning to, taking human emotion out of it so that they have the best pricing in the world. I'm not saying that is correct, that is wrong, that is right or wrong. It's just how the market is right now that we're seeing. And so, as computer coming or AI coming to more and more people using AI to making those type of decision and really giving the decision making to AI now, that's what you're seeing. Like you're just agreeing to the consensus over there. That's why again, AI, it's not like futuristic or anything like that. It's just an aggregate of what human collections have been thought of already. And they would model as like, well, since it happened 80% at a time, why not make it a rule, right? Why not make it a facts, right? Even though it's 20% at a time, it doesn't work. People are comfortable with 80% accuracy type thing, right? Um, because the 20% is just such an outlier, pricing or, you know, outlier in the sense that, okay, some people think that it should be worth $100 and then some other people think that it should be worth $3. You see what I mean? So that price, this differential is what you see. But yeah, so it makes sense to me when he said it like that. But of course, the most people don't realize um, that we are not trading against human anymore, right? And some retail still naively thinking that they are trading against human. You don't trade against human anymore. So that's why they think that they could, because they think that they are smarter than the rest of the human. What do? They think that, okay, well, it should be at this price, right? And so they try to buy low and sell high, as much as they can, even though it's disagreeing, or even though it's not what they're thinking of at that time. Then what is it, Tony De Niro was saying, well, it should be at $13, but I'm buying at $21 anyway, because I think, I'm smarter than, the people that think that the price is at, or it should be at $13 a share, right? And he's willing to pay that $8 premium, because he thinks that it's going to go higher from there. So again, to me, people are still vehemently disagreeing with the price point where it should be at, and so eventually it's gonna solve itself. The whole frustrating thing part of this is that we don't know when. When will people agree with you? Okay, that GME should be at a higher price. Okay, now again, that's just pricing. Human price things wrong all the time. People used to give no value to Bitcoin, right? Because it's just magic internet money. And now it's valuated at this particular price. You could argue that, well, because, so and so own, 100% of it, right? Okay, well, if in fact the institution owned 95% of it, then they could crash the price at any time. So it's not even valuable anymore, because the 5%, it's not true though. Like, people always say that. I don't think they realize how well distributed Bitcoin is. The people that own it, typically they want to sell it, 10 years. And they know that, it takes 10 years for them to accrue that amount of money. It takes so long for people to be able to, quote unquote, retire, right? If you're being relentless about acquiring Bitcoin. And so they would sell it at this price because they've been waiting for 10 years already. And for the people that are just new to the, whole idea of adding Bitcoin, they don't necessarily think that it's valuable to them. They think it's overpriced. Heck, I thought $60,000, $50,000 a coin was overpriced. Me. And I've been in Bitcoin for quite some time. I mean, know about Bitcoin, not in Bitcoin, but know about Bitcoin for quite some time. So again, that decision making, of course, is going to give you that pricing right there. But for people who know about the long term, benefit of it, and have the time to wait, have the ability to wait for that price depreciation to where they could change their whole entire generation for owning Bitcoin, they will wait for 10 years or more. So that's why Sailor was saying you buy Bitcoin at the price you deserve, which is the nice saying, nice explanation as to why, there will be people who think that at this price, it's too expensive for them. It's always too expensive. When it was $100 a coin, it was too expensive because it used to be $2. $10 a coin. Oh, it used to be a penny. It's too expensive. $10. I'm not paying $10 for this, Bitcoin. Fast forward 15 years later, it's like, oh shit, So again, the pricing is like that, where people don't realize the value of something, 10 years ago, um, and then come to find out it's actually more valuable than what you originally thought. And then you would end up paying the premium. That premium that we're talking about here is the premium of not having the volatility, not having to go through the ups and downs. Okay, the same way with GME, you guys, like, when you talk about the traditional finance people who are evaluating a company, they typically uh, trying to steer people away. And understandably, if you are a financial advisor, right, you want to be careful at telling people, say, well, just dump everything in GME. Can you imagine that if they do that? Uh, Number one, you expose your clients to risk, right? And they might not understand this company, the way that you do. So how can you expect them to, be just chill and like, even if they have, let's say they have $1 million, and yes, they could lose that $1 million, they will still have questions. Like, if you tell them to put a million here, and then it goes down 50%, they will come at you and say, why are you losing my money, 50%? Well, I just dump it in GameStop because I think it's this and this and this. And then you're gonna be faced with people either sue you or whatever, right? Because they don't understand, well, the volatility is what give that jet fuel to, for the pricing to happen in the future. Okay. If you're, so secure and, are more diversified, of course you wouldn't care too much, because, at any given time, one company going bankrupt, I mean, the whole company could go bankrupt, and then you have, you know, hundreds of other company that will support you in that. But my argument about that is that you cannot grow your money quickly if you diversify. Diversification is for people who, number one, earn a lot of money and they don't care, like high income earners. It's good for them because, again, they have stressful job already, and so they shouldn't be stressed about in stocks. Okay. And because they are high earners, they're able to accrue the value quicker. For me, I'm not a high earner, so I have to find, my edge in the market here, and I think I found one. Not sure that crypto is it. For a fact, I just have an inkling that Bitcoin is going to become important, XRP is going to become important later. So that's why I spend time to learn about those things. And yeah, GME is going to become important someday too. It's going to become one of the companies that you should be owning, right, in 10 years. Right? Well, technically, I have 6 more years to go. Because when I bought it, I told myself, okay, 10 years from now. I should note that on my anyway. Oh wow, 400 more. Keep buying and holding. Cool. I don't think we will ever go down after Ryan comes with a major announcement. I know any announcement, I feel like it's going to ensue the same price action. Simply because I think in whoever viewing this price here, whatever algorithm or whoever, is in control of this algorithm, just feel like they have more time, right? Because they think that Ryan Cohen is not growing quickly enough for them to be shaking in their boots. Okay. And so you could say that they're not scared because right now everything is pumping up, so much more for them to, I guess, have the liquidity to close if they can, if they wanted to. Again, just my point of view. I'm not saying that they are not scared in any way. They're scared that Ryan Cohen will do something drastic one time, and they just don't know what it is, right? And again, that's an element of surprise. But that also depends on the holders too, right? Retail might get so bogged down, might get so tricked into thinking that it's not worth anything, and then all of a sudden they sold to institution very low price because they think that, oh, this is not gonna work, or they just got scared. So at any moment in time, there will be sellers out there that will be giving the institution, these people, the shares that they need. And the other thing too, right now, because of the bond, the convertible bond holders, they are typically the retail arbitrage people, right? They really understand, the volatility, and pretty soon they will want that volatility. They're, they are waiting for that actually, and they will capitalize on that, up or down. Right? So for investor, obviously, it's a very good discount if you want to think of it that way. So if the announcement is good in your mind and the price coming down, that's a good thing, because the rest of the market, quote unquote market, doesn't feel that way. That's the sentiment that they want you to think. And so if it goes down to $20 and the announcement is what, we're gonna start arcade, right? Push start arcade, test it out or whatever. That news in and of itself is great, but that could be I guess, a way for them to say, well, Jimmy just spent a whole bunch of money to try this new concept, and will they be able to pull it off? And so with that announcement, they could crash the price down too, because they might say, well, Jimmy spent too much money on this. So the same way when they were launching the NFT marketplace, right? I don't know how many people were there before. I don't know where, at what price, because I didn't keep track of that one. But when they announced the marketplace, people thought, oh, it's going to go to the moon, but it's not. They dropped the price anyway because they spent $200 million, and they spent so many months telling you that how terrible 200, it's a failed business model, it's failing, it's crypto, they're bite more than they could chew and all that stuff, they're not a tech company, all of that negativity will come to that push start arcade too. So be aware of that. Now, in my opinion, I think it's a good thing that they do, and at least like more, not a concept, it's been around, it's just that it gives people the ability to hang out and just play games, tournaments, and all that stuff. So just delight customer. It's a way for people to get engaged in that activity. And in turn, it's going to give the brand more recognitions and all that stuff. Word of mouth spread quicker than you could blink. So, but eventually, the institution will come and they will, wake up to it at the price. Not only that they misprice or misunderstood or misinterpret retail holder, because they did not think that we could hold this long, you guys, I'm telling you. They thought that, if, it's drawn out quick, long enough, people would just being shaken out. But nobody did. I mean, we could say the OBV, on balance volume, it's still elevated, right? At what, 6 billion shares. This is the daily, but if you do the weekly, it's even higher, right? Accounting for, all of this goodness over here. So on average, I guess, right? Now, whether this should kind of reflect the price or not, that's up to you to determine. You know, if this follow the price in any way, shape, or form, it should be up here by now, like trading above right here, kind of oscillating. Right? And since it is kind of like 90% from that, you be surprised to see when they reprice this and how explosive it's going to be. Hey Sus, what's up? Um, but yeah, just my perspective, you guys. Like I know, like um, it's not that I'm not enthusiastic. Don't get me wrong. Like, of course, I'm in the company for quite some times and holding the shares, and yes, we'll acquire more as time goes on. Don't get me wrong too. I do, uh, you know, get tired sometimes because when I talk about GameStop and uh, giving people the the rundown, it's typically met by it's not doing anything much. Which again, the same way when I talk about Bitcoin to people, they didn't understand it that much. And even if you get them to understand, another step is needed too, is the courage to buy it, and then with the courage to buy, also the courage to hold it for a long term and continue to add more, even though it's down, whatever percentage that they were originally bought it for. I mean, the name of the game is to know the cycle. Of course, everybody has been. Yeah, the 4-year cycle. Um, so right now, institutional holding is increasing by day. Um, corporation companies are buying it in droves. You know that, right? The news everywhere, everywhere. And then, so it's a markup price point. They are ready to mark up the price higher. So how high? That's remain to be seen. That's on you to decide. I'm waiting on the XRP, XLM. It's been doing quite well. I am happy with that. Um, let's see. Right now, I'm in profit for XLM. I've been waiting for this move for quite some time. I've been adding since over here. $30. I mean 30 cents a share, and um, try to buy more. I wish I bought more here. I wish I would bought more here, but I didn't. But yeah, I have some other meme coins as well. Just a small, tiny amount. But my maximum my majority holding is in XLM. Why XLM and not XRP? Of course, I have XRP too, but XRP, I feel like whatever XRP does, right? XLM is gonna do twice as much in terms of like the price differential, right? Or at least where, sorry, where it's at now, relatively to XLM. Technically, XLM has not reached its all-time high yet. So if XRP is able to reach its all-time high, XLM should be at around here somewhere at this current price, and then price discovery. In my opinion, it could go up to $5 it's just my opinion, of course, like my speculation too. Just based on the market cap of GameStop, market cap of the biggest cryptocurrency there is in the world. So if Bitcoin goes to $10 trillion this cycle, which I think it's gonna do, then XLM could technically reach that $10 mark even. Okay, because the market cap is so low. It's like a small cap, compare. Well, not really small cap. Like if you compare the company, it's a $11 billion market cap right now. So then if it 10x here, 100 billion, yeah, that's too steep of the price. But again, not everybody's going to be able to sell at $10 a share, $10 a coin. So when it reached that, it's immediately going to come and correct it, consolidate. So I'm waiting for that. Of course, I'm going to take profit as it goes up. Just stages, and yeah. And if GME is still at this price point, like whatever, $20 a share, oh my gosh, like can you imagine? What do you think I'm gonna do with the profit that I get from crypto? I think it's baffled me that they think that, oh, let's just pump crypto and then let's leave GME here, and people would think that GME is not going to do anything. It's going to be in a surprise mode soon. But again, the pressure is building, so who knows? Who knows? It might not do anything for a while. Anyway, so I was able to get some of this. Not much. My goal is to get some of this just for the consistency of getting, close to 10%, right? Depends on when you buy here, right? If you get it at $100 a share, that's 10%. If you get it at this level, I got it at around this price right here. I know eventually I'm gonna, try to get it at a lower price too, but this is just a small little incremental addition to my portfolio here. This is for my long term. So that yield is gonna continue to go lower. It is trying to compete with the U.S. Treasury because the trajectory of the bond rate is going to go lower, and so people are going to chase yield. And if MicroStrategy is able to give you 7% or whatever, so for every unit you get $10 off this a year. Okay, which is a good deal if you think about it. Like right now, let's say if you buy it at 22. $10 divided by 22, that's 8%. Right? So long as you hold the shares, you're gonna get a dividend. So this is a preferred share that pays dividend. So think of it as a stock that will pay you dividend, and the way that they will pay you dividend is to use Bitcoin as its balance sheet to back up their existence, so to speak. So the more Bitcoin they have, the better for this particular preferred share to have that stability of them continuously paying. The reason why I like this one is because it is a seniority. It has more seniority over the other ones that he just came up with. And on top of that, if they miss one dividend payment, the next quarter it would be compound. So they would have to pay you twice. Twice as much. So instead of $10 per unit, you're going to get $20 per unit. And it's like accumulative like that. And then if they don't pay it so many times, you have the ability to, appoint somebody to make sure that um, that dividend will be paid off, in perpetuity. So it's pretty stable in my opinion, right? But remember, the value of this bond will continue to go higher as time goes on. Okay, if people caught on to this 8% a year is going to be less and less because people are going to chase it. Think about this. Okay, let's see, 10 divided by $200 per unit, that's 5%. So if the Fed is paying you at what, 5% in 20 years, right? Technically, this instrument could technically be worth $200 a share. And if you buy it here and then it went to $200 a share, you don't technically have to wait for that 10%. You could just hold it forever, or you could just sell it to somebody else at $200 because, they want that 5% yield. Why would they want 5%? Well, because they can't park it anywhere else to get 5%. Look at our, GME, GME $8 billion that we have right now, right? We could only get 4%, 4.7%, something like that. And so if if these companies caught on to this instrument here, of course, again, it's a risk, right? The risk is, what if Bitcoin goes under? What if Bitcoin got hacked? What if MicroStrategy mismanaged their money and all that stuff? So you have to, put your trust in Michael Saylor, or the same way, like if you buy U.S. Treasury bond, right? You are putting your trust in the U.S. Treasury bond, the management of the U.S. Treasury. Okay. So right now, there's a lot of mistrust there. So you could extrapolate from that and say, okay, so if people are mistrusting the government, then this instrument would do very well in, short term, in times of, chaos, so to speak. In which case they would be willing to even pay higher for the yield. Let's say $500, that's 2%, right? So, if the administration wants the rate to be lower, what do you think is going to happen? Right, at 0%? So, in my opinion, this is undervalued in the current environment. Undervalued. Right? Just my opinion. Maybe I'm mispricing this. But anyway, just my thought. Let's see. Hold on, let me measure. From here to 200. What is that? That's 60%. Right, so if Bitcoin's gonna go berserk, right, you might be able to earn 60% off this by the end of the year, with just the value of the bond itself. Yes, if Bitcoin goes down, right, this will go down with it as well. But at least you have, the 10% coming, or the 8%, depends on where you buy. The 8% of your holding, and then you could turn around and buy more of that. So you could compound it like that. Just turn it. And over the decades, you're gonna be fine. Assuming, yeah, strategy would still be around in 10 years, which I think it will. All right, so let's take a look at this article. I'm a bit lightheaded for some reason today. might not stay for too long. Hold on, actually, let me charge my phone. Anyway, so with this one, you see, this article here is trying to push GameStop, or at least urge GameStop to do something aggressively with crypto business model. Pretty suspicious, right? Now that they are fully immersed in crypto, every firm's already buy what they need. They are setting up crypto to be the, I'm not mad at that. Not at all mad at that. Don't get me wrong. It's beneficial for any way, shape, or form. But the narrative now is that, well, they have a potential here, crypto-driven business transformation, which is not far-fetched. Like, I'm not knocking at this article or anything like that, but it seems suspicious because they had been, trying to get their feet wet in the space of NFT already, and it didn't receive well, because it was ahead of its time, ahead of the regulatory clarity that we need. And so we still don't have the clarity yet, you guys. Like, yes, we have good stride, good, SEC are not going to be going after, crypto companies anymore. And on top of that, you have XRP, getting the lawsuit dropped, and it's finalized. It's not, now they could focus on building things, okay? Using the technology to build the technology to build things. Now with that, it will take time, you guys. Like, when you are building something, it takes time. So even if Jimmy were to get into these, Web3, the gaming and all that stuff, it will take time to get there. The best thing about Jimmy is that we have the cash to do it if we want to go with that, route. They could do anything, and there won't be any restriction, in going into it because of Wall Street, trying to impede on their progress because they don't want the company to spend too much money on developing new things, new and improved strategy, new improved, taking some risk, right? On, like, even with crypto holding, you could say that, because Ryan Cohen is pretty risk averse, right? He doesn't want to, use the whole balance sheets to buy into Bitcoin. It's ridiculous. Okay. 5 to 10 years to be ready to. So be ready to wait. Hey, it could be, or it could take 2 years. Who knows? With the cash that we have, yeah. I mean, you could speculate. Would you ever imagine, Anthony? I know you're welcome. I know. Welcome to the chat. Yeah. But can you imagine GME to be in this spot right now 4 years ago? No. I don't think anyone imagined that GME would have $9 billion or $10 billion in asset. Hard asset here, okay? Yes, you might say, well, they dilute shareholder, to get to that point. Well, okay, all right. Well, people buy the share for a reason, right? Whatever reason that they give to buy those share at those elevated price, that's on them. The fact of the matter is, GME has cash. Now it's solid, right? So they could do whatever they need to do with that cash moving forward. If people don't give a crap about how much cash they have, okay, that's on you, right? That's just you missing pricing it, or not bullish enough because you don't care about them having this much cash. Okay. Right? So the point of the market. And if you think it's going to take 5 to 10 years, okay. And you're not paying attention, you're not building the position right now, then 5 and 10 years later, when you forgot about GameStop, it's going to be $1,000 a share. Why is it 1,000? Well, because they proved to you already It's been proven. Right now, there's still doubt, right, that they're able to do it. Oh, will GME, will they go there, right? And so that's the volatility, that's why Michael's strategy, I keep saying Michael's strategy. Michael Saylor, put it pretty well. He said that volatility is a gift to the faithful. Okay? Just because it's volatile, just because people don't believe in it, you are paying the price right now for a stable, GME price at $1,000 a share. Because at that point, the company's already proven to you that yes, it could trade at $1,000 in perpetuity. The value will never go down from there because now they earn $2 billion a year. Do you think it's not going to happen? Yes, including the interest that they got accrued, in 10 years. And the interest, it will be compounding interest too, because that interest will make them more money, even more over time, over the 10-year time span. Hold on, you guys. Let me just tell you something here. I know I've talked about this before, and people don't realize the compounded cash flow that they could compound it from now on, right? People talk about discounted cash flow, okay? But GME doesn't have any debt. I know. Okay, Tony De Niro is going to be like, these YouTubers like lying. Okay, now they have debt. Okay. At 0%. Okay, all right. I mean, that's too detrimental to them. It's like they're paying 0% for the debt. All right. But with that, they have compounded cash flow because they only pay 0% on those debt right now at the moment in time. Yes, that debt will be converted to share at some point in time, but it will be converted only if it's going to go to a certain price. Okay? Now, if it takes 5 years for them to go there, to get there, then this compounded cash flow, what do you think it's going to be? I mean, even if it's like $400 million in perpetuity, what is that value at? Right? For 10 years. I mean, just that alone, what is that? That's $4 billion in 10 years. Oh. That's if they don't do anything to the cash. But even with this, right? Think about that compounding. Right? Look at it. Look at it, right? Of course, that's assuming that they don't do anything with the cash. They're not changing their business model, right? They're just flat rated at, earning. Right there. Earning operationally, earning and then losing, earning and then losing, right? Even if like something happened to the business, they're just fluctuating. Right? The whole key to this is that they're not burning cash. And even if they burn it to the tune of just a couple of millions over here. But when they make money, look at how much they make. Okay? So to come from that, look at this, right? To come from 300 million to now positive, this is the pivot point that you want to be. This is the capitulation that you want to be in as an early investor, even if it's 5 to 10 years ahead of time. It's worth it. Now, you might say, well, park your money elsewhere because right now, crypto is the hottest. Okay, you could argue that, which, I have some in that. But to say that GME won't have any value because of this, I don't agree with that. Report for attendance, better late than $9 billion. Thank you. We don't have the money forever. We don't have the money forever. If the share don't go up, we need to pay the money back at the end of the contract. Yes, of course. Not so much. I mean, we have the option to give them cash or force them to convert at a certain price. I think there's a price differential on, I mean, the premium. I should take a look at it like more in depth. Again, I just know roughly, at what point it's going to convert. And if it goes to that price point, it has to be 20 consecutive trading days. It has to stay there before they could convert. So there's so many, condition in which, the current shareholder would be diluted. And it's only going to be diluted based on the convertible rate if and only if it goes up in value from there. So it's technically beneficial for the current shareholder as well, because the current shareholder, if they're patient enough, they would be able to, take advantage of that 20 days trading before the conversion. So you would have plenty of time to decide, okay, let's say it goes up to Monday this week. It goes to $50 a share. The convertible note people cannot convert yet right away. Correct me if I'm wrong. I might be wrong on that, but I think it's 38. I'm trying to remember. It was 38 or something. 30% up in premium or something. So it wouldn't be $50. Let's just say it's $38. They cannot convert right away. So you would have time to either sell at 38 if you wanted to, or the company could technically force them to convert to share if it's too high, right? Or just give them cash back. But if the share price is staying at below $30 a share, the money, yes, would be given back to the bondholder, pay in full. But by that time, with just the interest alone, we probably would cover, $1 billion already, $1.5 billion. Right? So, yeah, by that time we will be able to pay it off with ease with the the amount of money we accrued. Yeah, so it's a deal for sure. It's a good deal. High liquidity. Now we could use that money right away. We don't have no restriction on how to use the money, even because it's unobligated loan or something. There's a term for it. Uncollateralized, unobligated. There's a term for it. Somebody write it down. I'm too lazy to pull it up right now. But the whole idea is that this right here, in 2 years, we would be able to, just interest alone, we would be able to pay off that convertible note with ease. There's no restriction on that. And then on top of that, this one we would be able to pay it with probably 2 years by this point in time, at this moment in time right here. And so if it's still at this price, lower than this convertible conversion rate, then yeah. on net, it is net good for the company. So yes, when Tony De Niro tell you we have debt, heavily in debt, I'm sure they're gonna use that term. I told you. That's their ammo now, is that we have debt now. Okay. And so that's gonna cloud people's judgment on the company, and it's going to give other people the ammunition to say, well, now we have debt. Okay. And so they will be mistaken to think that it is detrimental to the company. But what they're not told is that the debt is 0%. Right? So for people who know that, of course, we're going to be like, yeah, it's like $22 a share. Like, are you kidding me? Of course, I'm going to buy. Same way when people evaluating Bitcoin, right? They're like, what? People are dumb enough to sell it at this $17,000? It's like, okay. I mean, I guess people don't know the value of Bitcoin then. Like, and so they sell it. I mean, they bought it. And then they bought it. It's not to immediately become rich and powerful. No, they have to wait. How long did they have to wait? Well, thank goodness, because of what happened in the election and all that stuff, right? But regardless, whether it's election or not, global liquidity went up in value. So money printing and all that stuff, they would have to wait for what? 1 year, 2 years, close to 2.5 years in order to be at this moment in time right here, which returns around 6. Well, if you buy at the bottom, right? Who could time at the bottom? Come on, be crazy. So let's just pull it from here. If you are able to time at the top right here, it's 5 times your money right there. So in 2 years, you make 5 times your money. That's an immense amount of gain right there. Gain, if you're patient enough and if you know the value of something, right, before everybody else. Because back then the masses, okay, the people, like either retail or most amount of people were fearful. They don't want to buy it. The world is uncertain. They don't know who's going to win the election. So they just wait and see, right? Same way right here. GME is going under. It's only worth $10. It's only worth, no, not even $10. Back here, people were like, it's going to $4. Tony De Niro's like, it's only worth $3 a share. Right? Whatever that negativity is. And he would always underestimate the price because, again, the narrative that they want you to believe is that cash doesn't matter. That Ryan Cohen is too slow, that Ryan Cohen is not doing much to aggressively changing. Even though they do. What are they doing aggressively? He said it on the interview. They cut costs aggressively. So that's the aggressiveness that matters. But they want Ryan Cohen to aggressively risk the money rather than aggressively conservative with the money. So which one would you rather have? The leadership that aggressively gamble the money on new shiny things? Or a leadership that aggressively hoarding the money as much as they can? Pick. Take a pick. Take your pill. Now, the same narrative, right? Of course, again, I understand the inflation angle of it. I get it. But you could you know, you could outpace the inflation by doing it slowly too. You don't have to outpace it like to the tune of 10x a year, right? Because that's not sustainable for the price either, right? It's not protecting the investment or people who are, you know, trying to build any type of wealth in this company, because the price is so erratic that in and of itself will drive people out of this company. People, I'm talking about institution out there, okay? Because they can't predict it. Institution ownership wants stability. That's what they want. Okay. So anything institutional grade, that's why institution didn't get into Bitcoin until it's well over $1 trillion. And now it's about to be $10 trillion. So more and more capital is going to be driven to that $10 billion because now it's liquid enough for them to be like, okay, well, at least if I could sell, if I want to get out, I could sell $1 trillion at, in 10 years for something. Because it's so liquid. It's so, so robust, so to speak. The same way, why do you think Apple have so much capital driving into that company? Because of that stability. Yep. And again, it's about people agreeing to that price point, agreeing that, okay, Apple, no matter what, you could hear people anytime they buy Apple, right? They have that knowing that apples will never go anywhere. Right or wrong, that's what they're thinking. And so there will always be buyers at that price point. Okay. And eventually Jimmy's gonna be like that. I'm telling you. Yeah. Eventually Jimmy's gonna get to the point where people are have that stability. And that's the price you're paying for the stability, which is $1,000 a share. I think it's more than that. Why do you think Berkshire Hathaway keep going up in price? Right, over time. I'm not saying like again in 10 years, incremental, because people trust the brand, trust the leadership, the money managers, that they will do the right thing no matter what for shareholder. That's Ryan right there. Right? You know why? Because he's the shareholder as well. You know why? Because he have 10 what? No. He have 8% of the company. Okay. He's the majority shareholder. I guarantee you, no matter how many shares you have of GME right now, it's not more than Ryan Cohen. It takes an institution, okay? Vanguard, BlackRock, or whatever. Who owns more GME than Ryan Cohen, right? But keep in mind, Vanguard and all that stuff, they are a collection of investors here. They're not buying it for for themselves. They're buying for a collection of people. And so even that is just passive investing, right? So they just do it to fulfill the ETF and all that stuff. They're not doing it just because they believe in the company, they believe in the leadership, not like that. So as for people who are actively, deliberately allocating their capital to GameStop, they are betting on how successful can Ryan Cohen deliver this. Yeah. And people who are shorting continue to short this. They just don't believe in Ryan Cohen. They just don't believe that Ryan Cohen could pull it off. Okay. So we just need to shake them out. That's all. I mean, how best do you think to shake them out? You might think Bitcoin is the solution, right? People might think that, but will it? right? Now, I think that too. I think that if he's more aggressive on Bitcoin and just relentlessly buying Bitcoin, just like just like MicroStrategy, and just announce it at every turn, um, I think it's gonna do something, or surprise the market rather than buy Bitcoin, buy Ethereum on the staking one too, the one that will give you yield on staking. And that's not far-fetched either, you guys. Like if he buy Ethereum, he could use Ethereum to build a platform. Remember, what's the other one? Loopring, right? Loopring is used Ethereum to as a gas fee and all that stuff, right? And so when Ryan Cohen, like it's really to that business model, right? And it's coming, you guys. Like God, like people are just not really thinking to the future. What, just like Moran was saying, like this morning, I watched him. I was like, how can people just, well, again, it's designed that way. The media wants you to just focusing on the now. Companies right now is not worth this particular price point right now. And they think that it's going to be this right now because they don't use the cash to do something seemingly, right? Again, that doesn't mean that they're not doing anything or looking for anything, to be able to return 5-6x their, their asset here. But we're talking about billions of dollars allocation here. It's not like, 100 millions here and there, you guys. Like $1 billion is a lot of money. And just interest payment alone, you guys, like even if you just 5%, 5% or 4%, people are bitching and moaning. Like that's still a lot of money. Like to be able to make $300 million a year and then eventually $100 million a quarter. You could technically buy $100 million a quarter in perpetuity in Bitcoin, forever until the end of time. That will accrue value too. How about XRP? Right? XRP could be used as one of those rails to build, one of the platform as well. Not just Ethereum. Ethereum could be useful for something. And XRP is useful for something else. Right? There are companies out there that are buying XRP instead of Bitcoin, right? Because again, they are all assets that are limited amount of. Like you cannot create it more XRP if you wanted to. So that's future, like in 5 years, where do you think crypto is going to be at? Where do you think Bitcoin's going to be at? Right? So at this current price, right now, what is it? I think it's, hold on. Sorry. Yeah, so 17. Yeah, at this current price, we are up to this value. Okay. So, let's say in 5 years, you said that Jimmy's not doing anything. Like, so assuming they're not doing anything with the cash, right? And just, sit tight. And of course, if Bitcoin's going to be $1 million, which people are saying, let's go with that narrative. That is going to right there. $4 billion, right? In 5 years, assuming. Now that's going to fluctuate, right? Of course, if it's at 1 million, it could theoretically go to 10 million at some point. Hopefully, he's not going to sell or anything like that. Or even if he sell at $1 million a coin into cash, he would have $12 billion. I know it's like, well, 5 years, $12 billion. Well, that's only Bitcoin, you guys. How about this? How about this? The compound interest on this. I think you're not thinking big enough, right? And then not to mention people betting up and down this share price here. Yeah. So not to mention this will create value too. When people are betting up and down. And so when this creates some value, what do you think Rancon's gonna do? Issue more shares. In 5 years, what do you think they're gonna do? They're just not gonna issue more shares? Of course they're gonna issue more shares. And then they're gonna get another $10 billion. Right? So in which case, we're gonna be in the S&P 500 fair and square. And then that's what happened. People are gonna go crazy. Anywho, I don't know. Hopefully it's gonna happen soon, right? But it's gonna take some time. So just sit tight, buckle up, and enjoy the show. But yeah, so even with this direction of this article, I feel like it's telling you the direction that they want GameStop to be in, and not necessarily they won't be in that at all. I just think that they're not going to be in it in the way that these people want GameStop to be. They might steer to like selling hardware, it's like if they're able to sell Bitcoin products, right? Like the hardware, the ledger, the like exclusively, the exclusive rights for them to sell those hardware on the store. That'd be cool. I don't know. I'm just like speculating based on that. They're saying like crypto NAV premium. Or net value asset. Shoot, what's happening? Clicking on something. Okay. The stock has. Okay. They're just like talking about why should it, like they're trying to have. Jimmy hasn't yet justified its premium. What? Is this the only company in the world that has to justify its premium? While other company get to just, go up in value. It's like, well, their value is justified. Okay. Well, who said? Who said that it's justified? Who's justifying it? I thought the supply and demand would be the one who justify the premium, right? The people that are buying and selling those, buying the shares, and sell to other people at the premium higher than they think to. But the company cannot justify it's not that they cannot, but I saw a video, Brian. kind of fitting on what he was saying about. Let me find it. Find it. Nope, not there. I think it was looking through the history. A lot of Bitcoin stuff. I should just Ryan interview. Ryan interview. No, Ryan interview is not recent or anything. Okay, gonna be crazy. So this one 6 years ago. He was Chewy executive. Well, he just sold Chewy to PetSmart. But anyway, so let's go. I'm sure people hear this a million times, but he talks about how he's not commenting on the price. Let the market decide. So let's just watch together. Huh? I need to drink my coffee anyway. It's getting cold.
PetSmart in 2017, Ryan Cohen. Ryan, congratulations.
Thank you. Thank you. I'm glad to be here.
So you're not a shareholder in Chewy.
No.
But I would imagine you have a lot of feelings about seeing this company that you built starting in 2011 go public today.
It's a very, very emotional day. It's humbling. It's the culmination of 8 years of sacrifice, dedication, lots of hard work, an amazing team. It was far from an overnight success, and see it today is just incredible. So I'm very proud.
So what do you think is going to happen to GameStop? Is he going to be proud? Well, I mean, people are going to be like, oh, so he's going to exit out of the GameStop. He might, who knows, right? That might be a scandal in and of itself. But just listen to his work ethic, right? Saying that it's not an overnight success. 8 years of hard work here. Okay, how long have you been here? Has it been 8 years yet, you guys? And people are bitching and moaning? It's like awakened sheep. There's no premium. Where are? Yeah, cash on the stock. Yep, there's, again, when they're saying premium, they're talking about just Bitcoin holding alone. Right? NAV or whatever. Crypto NAV. So that's what they're confusing people on. Just on the crypto holding alone. They're saying it's like 18 times NAV or something. While you should be taking account the whole asset value. Right? So they only take into account this amount right here. Bitcoin holding. So current price, let's go back to reality for 1 second here. Right there. So current price around this. So they would divide that by the share price right now. That's how they're like, oh, it's not justified. So that's what they're talking about. But again, they're pick and choosing, right? They're not giving the nuance and that. They're hoping that people who are just skimming through this article and not knowing anything about GameStop would just be, oh, I'd rather buy, Meta Planet, or I'd rather buy, Bitcoin itself. Why would I buy a company that will risk, have the associate risk when I could just buy Bitcoin? Well, you could make that argument if you wanted to, because Bitcoin is great in and of itself. There's no, added value to it if you think of it as a intrinsic value, right? With shares of a company, you have the added element of surprise, whatever direction the CEO make. That's why, again, MSTR traded twice as much as the, well, at one point it's like 15 times its net asset value because of the generated hype, people are talking about it, or the short itself, like the people that are shorting the company previously thinking that it was not going to amount to anything, they got caught off hand. And so with that, it kind of feeds into MSDR success, because now they, force the price to go higher because of their own stupidity, right? Because they're betting against it so heavily. And any amount of good news, any amount of volume spike, whether, interest, the retail people, from the Bitcoin community people, right? And I'm telling you, some Bitcoiners, they don't like MSDR either. So that's also the price differential too. But there are people who understood, okay, MSDR is going to return twice as much as what Bitcoin typically, the volatility between the two. If Bitcoin move 1%, MSDR typically move 2%. So you could use it as a leverage. Well, why is that way? Well, because there are other instruments that Michael Saylor built. And those are, the bond thing that I talked about, like right here, Strife, right? And also, what's the other one? All of the other option instrument as well, right? So it create that engagement at every single traders out there, right? The option traders, the bond, convertible bond arbitrage, right? So it generate that I guess popularity in terms of trading volume at any given moment in time. So that's why, MSDR, if you hold MSDR, you are taking risk, but also higher reward as well. If Bitcoin were to, predicted to go up, then you could be sure that you could return twice as much. That's what people are hoping. It doesn't mean that it's going to be correct in perpetuity, doing that. At some point, it's going to decouple from the price of Bitcoin, and then people are going to, aggressively selling MSDR. So with that, of course, just be aware of what is happening. I really think that that's what they're trying to compare to. And it's apple and orange, right? It's not even two completely different company, two completely different strategy here. So, I mean, Michael strategy could do it well because they're first mover advantage, right? And they kind of corner the market already. So they will do best what they do best. And other company could replicate it too, sure, but will it has the same success? Remember, these are different management here, and you don't know who owns what either. You don't know who owns the Bitcoin and all that stuff. There are companies that are posting their reserve wallet, and so they're not hiding anything, but MSDR is not showing their reserve wallet. And so, yeah, so that the disagreement between the community as well. That's like, well, I'm not going to hold MSDR because they don't have any, a reserve. And people are going to, price it the way that they think it's going to be worth. They would much rather hold something that is 20 times net asset value because, they show me the trust of, at least I know how many Bitcoin they have, without taking in consideration, well, you're paying the premium then, right? Because you know for sure that they have this amount, and you don't trust leadership enough that they have said that they buy those coins and have those coins in storage. Again, everything is priced in that sense, okay? in the premium term. If you want the security, of course you're gonna pay the premium for that security of, being sure, right? Because I rather pay that premium than losing everything. Does that make sense? That's just market in a nutshell. I think Jamie's going to be okay. Yeah, I mean that's the speculation for sure. I think it's gonna grow faster than Berkshire Hathaway, simply because of the sheer size of you know the market. But again, it takes Berkshire Hathaway 40 years to get to this point in time. So let's see, what is this? How this example relate to freshness? My reading is right. Value of a twin. Sorry, I'm just skimming. I hate to read out loud, you guys. So this article is like on seeking alpha. You get it yourself. But yeah, not much, you guys. Okay, so let's go back to the beautiful balance sheets over here. I know people should memorize it by now. I should be memorizing this by now, but just in case people think that I'm lying, lying about these numbers and all that stuff. I know like people are not enthusiastic about this at all, right? We are enthusiastic because we marvel, we're like, oh my gosh, just in the cult over here. No, it's not about that, you guys. Like it's about seeing the improvement, that incremental change could add up to a very big fat, value later on, in down the line. People was so against Ryan Cohen cutting down store. Okay. That they are rather risking more capital in order to grow up to that valuation. Meaning that they want you to spend money, company's money, other people's money, to expand. And if they lose it, yeah, it's just investing. Just part of investing. Ryan Cohen did the right thing when he's like, well, treat company's money as if it's your own money. And people were like, oh my God, he's a terrible CEO. He's not doing anything. Remember that? When we were over here, people were like, let me see. Let me go back to, where was it? I remember $6 million. Back here, somewhere. Hold on. I promise I have a point. Just have to wait for it, right here, right? They're like, it took 3 years for Gamestop to earn $6 million. People were laughing, you guys. Like, people were just scoffing and chuckling and giggling. And it's like, this company is shit, right? Fast forward, okay, did it really take them a year to make $6 million? Okay, so from here to here, okay, that's a year. So let's note that, okay? Let's note that. So from $6 million in net, a year later, it's $130 million. That's a year, right? Remember when they scoff at GameStop? And I know net, right? They're going to be like, well, profitability of the operational cost. Like, what does it matter if they earn it from interest versus operational? I thought net is what matter, right? So when they account for debt, they're like, well, net cash is not that much. Okay, if it matters then, now about net cash versus the whole amount of cash that they have, then why did it not matter here when they account for something that matters, that truly matters, which is the net income? Picking and choosing, right? People are just cherry picking because they want to drive the narrative. Now, make no mistake too, like, of course, I'm bullish on this company. I own a lot of this company. That's why I'm looking for the positive. But I just want you to know the difference. Because no matter what narrative you hear people say, do you agree with that? Is it in line with reality? Right? That's what I'm here for. Truth. And the truth is, this company is not so bad. It's actually amazing, actually. The truth is, Ryan Cohen is here to build something. Okay, look at this smile. Look at this face. Come on. Like, who wouldn't love that? Okay, I cut him. So let's continue with this beautiful man right in front of you.
One of the things that's been coming into focus in terms of this IPO is how much capital is being raised and how much of that capital is going to go back to paying down debt at PetSmart versus back towards operations at Chewy. What do you think about that?
Yeah, I mean, I can't speak to exactly the capital structure, but what I will say is that it's a capital-light business and it requires very little to engender its growth. And so, the company has gone from 200 million in sales in 2014 to 3.5 billion in sales in 2018, and it's burned through about 140 million bucks, all of which has gone into investing in new customer acquisition and future fulfillment centers. And so it really is a function of how quickly you scale the company. But at any point, we could have, ratcheted down the marketing spend and been profitable. But for us, the strategy has really always been about scale and market leadership and building a really big business. And the governor of growth has always been free cash flow. And so we've always been very disciplined about that.
You yourself had a
Oh, shoot. What? Thank you, Awoken Shoot. I turn off. Oh man, I was making so good of a point. This happens to me all the time, you guys. Like, you would never know now how good of a point that was. Now I forget. Shoot. Ay, ay, ay. Okay, let me go back. Let me go back to my original point over here. Okay. He said that he was disciplined. Let me go back. Sorry.
Leadership and building a really big business, and the governor of growth has always been free cash flow. And so we've always been very disciplined about that.
you yourself.
So he's saying the governor of growth is being disciplined about the free cash flow. Okay. So my point is that free cash flow, look at this amazingness, okay? Look at this amazing free cash flow and how disciplined this leadership is. Okay, where did it go? Free cash flow. Okay, people were like, "Oh, they're losing." When they're losing like $200 million free cash flow, people are like, "They're not even cash flow positive." It's like, okay, all right, well, give them some time, okay, and then over time, it just cutting, right? No matter what they're doing to bring the cash flow to be positive, people just laughing and scoffing and saying that they're not doing anything. It's demonstrated that they have been doing something here. Like, you cannot just not doing anything and have this happening to your balance sheets. It has to be intentional, you guys, right? Leadership don't just successful overnight. No. Like, people don't realize how much work running a company of this size to scale to the point where you get people interested in investing in the company. It takes a lot of work and time, right? And even then, you have naysayers out there who just, again, because they don't know the hardship that is ensuing for people to have that driven. Remember, he's a billionaire. He doesn't have to do this, you guys. But he do it because of his passion. Now, you could laugh at his passion, that he's not for retail investor or anything like that. That's their narrative. You could say that, but is it truth? Not really. I think he's here to build something that lasts, or he wants to build something that is good for his own work ethic. That to be rich, you have to to be rich or whatever as an investor. And perhaps he doing this because he saw that retail investor has been kind of decimated, so he want to make sure that he operate a company in the best principle way, so that the market has a company that they could trust in leadership, doing the best for shareholder, and actually doing the best for shareholder, not just in mouth, in words, but in actions. Okay, that is the opportunity right there, and even that particular narrative has some value in it, because every single companies out there are just interested in taking your money, right? They're not interested in investing in the growth, the long-term stability of the company. Okay, so I know there's a lot of market participant out there, you guys, so you cannot please everyone, but the people that see the value here, they will see it, and then they will cherish it. They will add more if they can. They will protect it. They will talk about it. And yeah, over time, like, even if I'm not talking about GameStop, people are going to talk about GameStop for the rest of humanity. I'm telling you. You cannot forget about what happened. And even that has some value that people don't even understood. It's brand. It's the brand. Not to mention. Let's just talk about this Staplegate thing. Huh? I haven't looked at it recently. Okay, let's see. What is the thing now? Oh, see, 250,000, close. Already, $250,000 for this. Okay, so of course, 3 more days to get to 1 million. I mean, so even that has some value that people don't really give in, enough credit for. And so he's conservative. He's telling you there. I know, like, this is about Chewy, but again, since back then, he was, on CNBC, he was not an idiot yet back then. He was a genius because they want to pump, Chewy to retail investor, even though, in that particular moment in time, Chewy was not profitable yet. Okay. Oh, Chewy is actually not profitable. That's their, narrative about why GameStop's gonna fail. Because they were like, well, Chewy wasn't even profitable. Okay. Well, somebody pay $3 billion for it, for an unprofitable company. So it was worth $3 billion, $3.3 billion, when it was unprofitable. Imagine when it's profitable. Right? I mean, people don't think that. Like, what? But they drive that narrative because they want you to think that this man is unsuccessful. This man is unfit to run GME. And who drive that narrative? Michael Pachter, the Wetbush guy. It's all narrative, you guys. All narrative. So you have to be good or get good at it or learn about it to evaluate the company based on your own thinking, your own understanding of the business, understanding of, the balance sheets. If you love it, is it growing? I know a lot of people is not enthusiastic about this operational income right here. Okay, then wait. Right? Wait until they bring in what? What is the amount of money do you want GameStop to bring in operationally before you say, okay, I'll buy that? Can I say 10x from here? Right? If GME is only worth $13 a share, based on this, right? So then GME, when it brings in $100 million, a share, $100 million a year, because this is a year, right? Operationally, then it should be worth $26 a share, right? Okay, so do you see the trend here? Now, I mean, is it safe for you to say, like, is it more probable that they will do that based on this trend that you see? Are they trending down or trending up, do you think? Right, so being able to detect that trend early is what the early investor will immensely benefit from it. You don't want to wait until they prove to you that they are successful to buy into it. That's precisely why people would pay $3 billion before Chewy was profitable. Because they know that if it's profitable, it will be worth more than $3 billion. They're not waiting for Chewy to become profitable to buy. Yes, there are some people who thinks that makes more sense because then they have that stability. I get it, right? There's no risk of quote unquote losing money. Great. But let's hope that you could buy it at a lower price than the rest of the people that are coming to the same conclusion as you. Yeah. So again, people have the freedom to think whatever they need to. Oh, sweet God, please push it down to $14. You might be able to, and then people are gonna pull their hair out. It's like, Chewy is a terrible company. Sell now or you're never going to get your money back, right? There's always going to be people. I'm not condoning that. No, I'm not advocating that at all. Human life, your child is worth more than GME. Okay, don't do that for real. I hope you're joking. So yeah, don't do that. What you can do though, take an extra job, like even sell your house. That's also another. I'd rather you sell the house than your firstborn. Don't be crazy. But anyway, so let's continue.
Had a nice exit a couple years ago, got some free cash. Are you investing in IPOs this year?
Not any yet.
Another question specifically about the pet business. Omnichannel is big right now, blending physical and digital retail. Given what's happening with premium brands and treating pets like people, if you were doing that, would you do it in urban areas or would you do it kind of in the suburban strip malls where the Petcos and PetSmarts have been in the past?
I really think it's all about creating an experience for the customers. And so if you're going to, invest in physical stores, it really needs to be focused on delivering an experience where people want to bring their pets into the store. And so I think it depends on the category, but to the extent that retailers are focusing on creating an amazing in-store experience, then I think omnichannel strategy can make a lot of sense.
You sold for $3.3 and you got a $14 billion market cap today. Did you not sell for enough, or has there been enough growth since then to validate today's market cap?
Yeah, I mean, I think, we were, at the time, we were running a dual track process, and it felt like a fair deal to us at the time. It worked out really well for the team at Chewy. It worked out really well for the shareholders at Chewy, and I'm glad to see that it's working out well for PetSmart. So I'm very happy.
See? So at the time, it was value at that price for a reason. Then, of course, again, when they are promoting it to retail, at an exorbitant amount of money, multiple to what the company could achieve, it's okay for them to promote, right? But it's okay it's not okay for GameStop to trade at that multiple. You know why? You understand why. I hope you understand why. It's because they want to promote their own bag, their own, something that they own most of. They already bought Chewy from Brian Cohen. Okay. Back then, you don't have this appearance of, manipulation going on because people just didn't expect it to happen in that manner. Not to say that the price was not manipulated. It was just that we're not aware of it before GameStop. Because we just thought, oh yeah, people are just enthusiastically buying into this, not knowing that the algorithm actually is the one who elevated the price that way. Yes, some of it based on the supply and demand and all that stuff, because they have the ability to see your ordering book. They know that people are willing to pay $40 a share, right? At the time, even though the company's not making money. Can you imagine that? And operating in that sense. So fast forward, if GME were to IPO today, if GME were to IPO today, what price do you think they're gonna mark it up to? With this amount of cash, you think they're gonna sell it to you at $23 a share? No. At least 100. And keep in mind, GME is profitable right now. I know people are like, GME is not profitable. Ooh, I don't know how people could see this, and then they're like, even over here, like, well, it's only to $7 million. That's nothing for a $1 billion revenue company. Okay, now it's a little bit better. How about this? How about this amount? Is it too much? Too little? Huh? Hi, people. Oh, okay, 18. Okay, okay, that's still terrible though. I mean, they're adults. I get it. So, um, um, let's see. Doing 3 extra shifts this morning. Oh, this month's. Hey, if you could do 3, you could do 5. You know, this is the type of the economy they want you to be, like more productive than ever. Right? You have to beat the machine now, right? You have to beat the AI. So don't be lazy. If you do, if you do 3, you could do 3. You could do 5. I'm just kidding. Just kidding. I'm not even doing anything extra right now. I just feel like, you know, I need to enjoy my time too. Right? You know, I have a full-time job. Doesn't pay much, but it's more like a security than anything. Because, you know, I'm pretty lucky because, yeah, I don't have much expenses. Thank goodness. Thank goodness. Not to say that, you know, in the future it might not, you know, pan out, but I have GameStop. Obviously, my future is bright, right? So, um, but yeah, so see this compounded interest on the interest accumulation. This is not a joke, you guys. People scoff at that. Only $200 million. You know what other company says? They pay this interest in the minus. They are paying this interest to someone else, taking away from shareholder to someone else. While GameStop is the opposite. GameStop is taking and hoarding the money on the interest, collecting, slowly. But eventually that slowly will be coming, okay, instead of $200 million a year, now it's going to be $400 million a year. Because now, you know, the cash pile is just so big. Is $400 million a year in interest payment large enough for people to be excited about? Right? And remember, free cash flow even snowball faster than the actual net income. It's all about free cash flow, right? How is this not registering to people? I don't know. Maybe they don't want to register. They don't want you to even think about this. While back here, they allow him to say free cash flow, it's the best thing. You know why? Because free cash flow then was important for Chewy to be traded at $40 a share. 4 times the value of what Ryan Cohen sold it for. Do you understand that, right? Now you could say, well, it's overvalued then. Like, just because it's traded at $40 doesn't mean it's worth $40. Okay, you could argue that. But when they want to promote something, they will pick and choose what to highlight. Okay? And so right now, what are they highlighting? They're highlighting the fact that we are taking on debt, that we have debt. They're highlighting the fact that we're holding cash. Since when holding cash is terrible? Well, you know, I don't know. So yeah, and people will go with that narrative. I'm hoping, you know, more and more people are catching up to this as quickly as possible. But it might take a lot of time for people to realize that. I mean, even Anthony, I don't know if he's still here or not. Still think that it's gonna take 5 more years, right? And imagine if this is the direction of of what, 1/4, right? Is this 1/4? Yeah, this is direction of 1/4. Imagine what 5 years worth of this compounded cash flow is going to be. And that's why I'm saying, like, maybe $2 billion would shaking people, to the core. Because GME has to prove to so many people that they are actually a good company to hold. They have to justify its existence. Right? It's not enough just to exist in this paradigm here. You have to justify it. And they want Ryan Cohen to justify it. My argument is like, well, can you read for yourself? Can you do plus and minuses for yourself? Why do you need the CEO to be like, 2 + 2 equals 4, Your Honor? But 2 + 2 is equal 4. It has to be 4, right? And Ryan Cohen has to say 4 before people move? Really? Are we not capable of critical thinking for ourselves here? Has it been lost in the ether somewhere? Because somehow AI is gonna make all the decision for you? Guys, come on. I know I'm babbling too much right now. I just feel so good about owning this company. I know I'm trimming some here and there, but again, like right now, I'm majority back into GameStop again. I used to have XRP in my long-term bag, right? In hindsight, though, I did sell XRP, the 2-time XRP ETF, too early. I could have get more GameStop with that if I stay in XRP, but I just couldn't resist, $23 a share here. So I took some profit off of XRP. In hindsight, like I said, I should have saved. I would have, was able to get another 100 shares off of the gain from just a couple days. Okay, I have, right now the majority holding is doing well. So eventually it's going to come back to GameStop for sure. Like I said, if GameStop is still at this price point, come on, you guys. Like, this is like a no-brainer. And, my other thought about the price movement here too is that when crypto people, whoever's on crypto, me included, take profit from crypto, okay, where do you think that profit will go? Some of it's going to find its way into GameStop, right? So it's coming. I mean, no matter how you look at it, okay? And with this craziness of the Staplegate over here, we'll keep monitoring. And we'll see. And it seems like, you guys, okay, hold on. Let me play Ryan Cohen here. It's another 5 minutes.
I love the story. Your original idea was jewelry.
Yes.
Right? And what switched you to pets, and are you glad you didn't go into online jewelry?
Well, yeah, I mean, we weren't very passionate about the space. I was at a neighborhood pet store one day with Tylee, my poodle, and it was an amazing experience. And so I had an epiphany that if I could really recreate that experience, but do it online and at scale, and you think about all the small things we've been doing since day one, right? The handwritten holiday cards and the pet portraits and the flowers, and it's really bringing a face to e-commerce. And so we were able to differentiate ourselves and build a really big business. And the vision since the beginning is really to build the largest pet retailer in the world. And it's been an incredible journey.
A lot of folks like to point to the ill-fated Pets.com in the late 90s, early aughts. I mean, that was the example out there, the biggest example out there, I think, when you were starting the company in 2011. Why'd you still move forward with this model?
I'm contrarian, and so I think that created really white space where you didn't have that many people going after the category, and so it created a big opportunity for us. Having said that, it was a low-margin business that required getting to scale in order to make the economics work.
How much does fast delivery matter in this category? Because you got heavy bags of pet food often. People know when they're getting close to the bottom of one, and for Chewy, the subscription delivery has been important. Does it really need to be that fast?
Yeah, I mean, I personally think so. I think within e-commerce today, it's really table stakes to perfect that flywheel of fast shipping, being competitively priced, and then having the selection. And we really differentiated ourselves by being the category experts and, really bringing a face to e-commerce. And really, at the end of the day, we just happen to sell pet products. Frankly, I think, if you're in the business of delighting your customers, I think that you could be very successful, and I think we would have been successful, frankly, in any category.
Talk about a little what you know about, say, my pet. Right?
Yeah.
You probably know how much he eats per day,
Yeah.
and thus when it's time to order more food, when his next checkup is due. Is that all wrapped up into various algorithms you have back home?
Yeah, absolutely. But I think that, we try to create an experience that's really frictionless. And so whether it's the one-page checkout or just all of those things, we don't want to inundate you. We figure if we deliver an amazing experience, you'll come back to us. And then we go and we do all of those small things that, really create that wow experience. And you tell your friends and family, like, this is the best experience. This is where I need to shop.
So it's not a shower of notifications and taps on the shoulder.
Exactly.
Right? You're
exactly.
looking for the consumer to touch back themselves.
Totally. Exactly.
I want to go back to the delivery piece of this for a minute, because one of the things I found fascinating in reading about the history of the company is the fact that you actually built out fulfillment centers.
Yeah.
A lot of e-commerce companies actually outsource to third-party logistics companies. It's been a big opportunity, obviously, for Amazon, XPO, UPS, FedEx, et cetera. Why did you go down that route, and how does that set up the company for future scale?
It really is hard to scale to, the vision since day one was to build a multi-billion-dollar business. And so we weren't experts in fulfillment. In the beginning, we were using a 3PL. It wasn't scalable, and so we had to become experts. We had to make it our core competency, and we brought fulfillment in-house in early 2014, and we never looked back. And today, when you think about fulfillment at Chewy, it's, world-class operations. We've got 7 fulfillment centers.
What part of this business is sensitive to the economy? Do people, they're not going to stop buying food for their pet, but do they buy more expensive food or maybe more treats when the economy is good and then scale back? How does that work?
I think we've really have the tailwinds of just the shift from offline to online, and then, the humanization of pets and the market moving up and average selling price moving up. And so, if you look even during the Great Recession, the industry grew, and it's a $70 billion TAM today that's growing at, roughly 3 to 5%. I think the last thing people typically are going to cut back on, even during a recession, is their pets. And I think what's even more durable is really the consumable part of the business, which makes up a big chunk of Chewy's revenues.
Wow. Anyway, he's pretty good. Anyway, if you see that and you don't trust the leadership by now, I have no idea what to say to convince you. Okay, let's switch gear a little bit. I know I'm gonna leave in a minute, but before I let you go, I've been tracking this for quite some time, and this is just the burn rate of XRP, and XRP is burning, right, at the rate of, now I don't know if I'm counting this wrong, but this is like, as time goes on, I feel like in a year, daily burned is lower for some reason. So I don't know where the utility part comes in, but again, the fact that it's somewhat deflationary is what I'm looking for here. So I'm just trying to determine, okay, how many tokens is burned in a year, and then with that token you could really figure out how many years would it get to be a certain amount. So again, it increased the value of something. And will every single year you see more or less burned, or just, how many people are actually using the network, so to speak. But yeah, so far there is some burn going on here, some amount. Is it meaningful yet? We don't know. Depends on how many people are actually building on the network. So I'm curious to see for myself. That's why I track it that way. Again, part of me wanting to kind of see where the token in and of itself could be useful for. And of course, XLM is one of the chain in which I am also kind of, again, speculating, right? Because of the XRP price. Typically, crypto follow each other. Bitcoin goes first and then altcoin season after. So yes, you see the Bitcoin dominance going down, but at some point, Bitcoin's going to take over the market first, and then altcoins going to follow at a much more aggressive manner. Okay. So again, that's why I don't have many, mostly Bitcoin, is because even though I think it's going to be valuable, I'm just short-term minded, thinking like, okay, well, I have some GME already, so technically I have some Bitcoin built into my shares. Okay, so currently I shaved some already, so right now I have only 2,000 share at the moment. With that 2,000 shares at the moment, I have closer to 0.02 Bitcoin. So is it worth, anything at the moment? Not right now, but if you hold it for 10 years, right? Assuming that this particular Bitcoin, this particular holding would be worth however much, right? There has been an estimated that Bitcoin should be at $100 million a share. People are gonna be like, they're never gonna go there. Okay. Well, let's go with MicroStrategy model, right? He said that it could be $13 million. Okay, let's $13 million in 21 years. Okay. $13 million a coin. So if GME doesn't do anything, nothing, $13 million a coin will give GME, with the current holding, right, assuming they're not adding more. In 21 years, GME is going to be $61 billion with just Bitcoin holding alone. Okay, we're not talking about this compounded in 20 years. This cash compounded in 20 years, right? And not to mention the business that it's gonna be able to grow up to, scale into. Yep. So, future is bright. Don't be, discouraged at the price action. Just know that a lot of time it's patient, and it's not gonna take forever. Don't think like, oh, it's gonna take forever for them to do this thing and this thing and this thing. Before you know it, that forever, it's here today, right now, next week. Okay, so I know people are like, well, 5 years is a long time. Has it been? Is it a long time? No, it's not. But anyway, so that's in 24 years, right? In 20 years. Of course, that's like a very, what is it? Conservative estimate. $21 million a coin. Would that give it? Look at that. $21 million a coin. Right? There you go, $100 billion of cash. I know that'd be crazy, right? Now, if they buy Ethereum with it, right, adding more to the reserve, even more than that. All right, guys, I am pooped out. I need to eat something before I pass out. But yeah, I hope you learned something. I know this is just my perspective. Obviously, don't take it as a and all be all or anything. I'm just speculating on the crypto market here. Just because I think it's gonna go somewhere doesn't mean that it's going to go there. Um, I'm doing my best to try to grow my portfolio in a meaningful way. I'm trying to beat the market here. I've been doing it on and off. It's not consistent. One year I was doing pretty well. One year I was down substantially, but because I don't sell it, because I don't take the realized loss, I'm still in the game. So currently, my cost average on GME is still at 31 something. So say 32, just to round it off to the higher, price. So 32. I'm not worried that it's not gonna ever go to $32. Of course, my goal is to lower that cost average as much as soon as possible. Right now, I just cannot add to my Roth IRA at the moment, so that's why it hasn't been added in a new money term. Of course, I'm trying to gain it based on my crypto prediction here, so that's why I, periodically shaving some shares in order to, bet on my, ability to create more shares. That doesn't mean that you guys should do that same thing. No, don't do it. Because again, you take the whole risk of, okay, am I confident in myself enough to be able to do that for me? Okay. So the confidence comes from that. Come from my own understanding of Bitcoin, coming from my own understanding of how other coins move, right? So that's why I'm taking a chance of losing some shares of GME in order to do that for myself. But of course, I owned it too. Sometimes I'm wrong. Like shit, I should have been in GME at this moment in time, right? So it's all a guessing game, it's not much. Of course, I think that I'm smarter than the rest of the people when it comes to when it comes to crypto. That doesn't mean that I'm smarter. No. So just be aware of that. Be careful. Need information that you're getting. Okay. So as long as you have the ability to think for yourself, that's what I'm here for. To encourage you to think for yourself. And have the conviction. And have the information that is needed for you to make that decision. Remember, information is gold in and of itself. It's valuable because if you have the wrong information, you're going to make the wrong decision. You're going to make the wrong choice. You're going to make the wrong move. Wrong everything. So your goal is to make sure you got the most pristine information as much as possible. Go to the raw data if you want to. Go to the lit exchange. Go to the volume that is being traded. It's a lot. It's a lot. I know people think that investing is easy. I get it. Most people who have the most money, to just throw at the S&P 500, they don't really care too much, right? Because they could save $10,000 a year. Versus somebody like me, I can't. Some years I could do that. Some years I can't because of the expenses. Like this year, I know for a fact that I cannot do 10,000. I try, the best way I know how, but some medical bill that I have to pay early on this year, and then also too for my family. They have some emergency. I have to help them out. What can I do? We in this life, if you could help some people out, if you have the ability to do that, I count that as a blessing. So not to chew on my own horn or anything. Just, I just think that sometimes you just need to help people out that are less fortunate than you. Okay. And I'm just hoping that that paying forward will yeah will give me back tenfold in return. Oh, why are you redacting the message, Asa? But I know. Thank you. I saw that message already. But anyway, so I'll let you guys go. I will yeah. See you when I see you.